Are you in your 30s and thinking about how to secure your financial future before hitting the big 4 to 0? Your 30s are one of the most crucial decades for setting yourself up for long-term financial success. The moves you make now can significantly affect your financial security and freedom for the rest of your life. In 2026, there are key money moves that can help you maximize your earning potential, accelerate savings, and set yourself up for a comfortable retirement. In this guide, we'll explore the top 5 high-impact money moves you should make before age 40 to build a strong foundation for your financial future. 1. The human capital pivot: AI upskilling. By the time you reach 40, your primary income is likely to be your biggest asset. The modern economy places a premium on your ability to adapt and grow in an ever-evolving job market. In 2026, one of the most effective ways to increase your earning potential is by investing in upskilling through AI-related certifications or management masterclasses. A $5,000 investment in an AI specialization certification or a high-level leadership course can yield a 20 to 30% salary bump, which is a much higher return than most stock market investments will offer in the same time frame. Investing in these skills doesn't just offer short-term financial rewards. It also ensures long-term career growth, setting you up for success as the demand for skilled professionals in AI, automation, and management continues to rise. These certifications and courses make you more marketable, giving you a competitive edge in your industry. Furthermore, the knowledge you gain will allow you to solve more complex problems, drive innovation within your organization, and improve your overall job performance. These advancements often lead to higher-paying job offers, promotions, or the ability to take on more responsibilities, ultimately accelerating your career trajectory. What's particularly valuable about these upskilling investments is that they compound over time. By increasing your expertise in emerging fields like AI and leadership, you're positioning yourself for continuous income growth as you approach your peak earning years. Each investment in your education builds on the last, resulting in career compounding. Essentially, every course or certification you complete doesn't just give you a one-time bump in salary. It opens the door to new, higher-paying opportunities and greater professional satisfaction, leading to exponential growth in income and career fulfillment. As AI and automation become even more integrated into industries across the globe, those who invest in mastering these technologies will remain in high demand. The world of work is rapidly changing, and by pivoting towards skill sets that align with the future of the job market, you'll ensure that your career stays relevant and rewarding for the decades to come. 2. Maximize catch-up infrastructure. As you approach your 40s, the clock is ticking on retirement savings, especially if you haven't yet reached your Coast Fire number, the amount of money you need saved that will grow on its own to support a comfortable retirement. If you haven't hit that number yet, aggressive front-loading of savings before age 40 is essential. The key is to redirect every bonus, raise, or unexpected windfall, 50% or more, into tax-advantaged growth accounts like IRAs, 401(k)s, or high-yield savings accounts. By focusing on maximizing contributions during your 30s, you can take full advantage of the compound growth in these accounts. The math in 2026 proves that $1 invested at 38 is worth significantly more than $2 invested at 48. The earlier you start saving and investing aggressively, the more your money will grow over the years, taking full advantage of the power of compounding. This is especially important when you're in your 30s and may have fewer financial obligations compared to when you enter your 40s, making it a prime time to allocate more of your income toward long-term savings. Starting early allows you to capture more years of growth, and with the rise of tax-advantaged accounts, you can shield more of your earnings from taxes while also earning returns on those savings. The idea behind catch-up infrastructure is to put the majority of your savings into accounts that are growing tax-free or tax-deferred, which means that not only are you investing for the future, but you're also reducing your tax burden both now and in the future. This allows your money to work harder for you, compounding year after year, while simultaneously shielding you from the burden of higher taxes later in life. As your 40s approach, your retirement savings should ideally be growing in the background, automatically contributing to your future financial freedom. Front-loading savings in your 30s gives you the financial flexibility to avoid relying solely on contributions later in life, thus putting you in a much stronger position to enjoy a comfortable retirement without financial worry. By aggressively saving and investing now, you'll be setting yourself up for success in the long run, allowing compound interest to do the heavy lifting as you move into your peak earning years. 3. The legacy debt liquidation. Carrying bad debt, such as high-interest credit card balances or car loans, into your 40s is one of the most financially damaging mistakes you can make. Entering your 40s with significant debt hanging over you, limits your ability to take on bigger financial risks, such as investing in a business or real estate. Before you hit 40, it's crucial to aggressively tackle and eliminate any high-interest debt. In 2026, using a Debt Snowball AI tool can help you prioritize and pay down high-interest debt efficiently. These AI tools automatically identify which debts you should pay off first and offer strategies to expedite the process. By focusing on paying off any debt with an interest rate above 7%, you can eliminate what's often referred to as the lazy tax of paying interest, freeing up your finances for higher-impact financial decisions. Starting your 40s with a clean financial slate is a powerful way to position yourself for success. Once you eliminate debt, you'll have more flexibility to take on business opportunities, make investments, or save for your future without the anchor of monthly interest payments. Having a clean balance sheet by age 40 gives you the freedom to make bigger, more impactful financial moves without the burden of monthly debt servicing. 4. Secure longevity insurance. In 2026, life expectancy is increasing due to breakthroughs in healthcare. While this is great news for your long-term health, it also means that you need to plan for a much longer retirement. A critical mistake people make is assuming that they only need to plan for a 20-year retirement. But with advancements in medical science, you'll likely need to plan for a retirement that could last 30 to 40 years. One of the best ways to prepare for this increased longevity is by securing term life insurance and critical illness cover before age 40. These insurance policies are significantly cheaper when you're younger, locking in low premiums that will protect your family's financial future from being wiped out by a single health crisis. Having this coverage in place ensures that you can focus on building wealth without worrying about the potential financial strain of unexpected healthcare expenses. In addition, securing life insurance and critical illness coverage in your 30s ensures that you're covered for the long term, providing your family with financial protection should the unexpected occur. The cost of healthcare is rising, and by investing in these types of insurance policies, you're making a high-impact move that will protect your family's wealth and financial future. 5. Establish a secondary equity stream. Relying solely on your primary income isn't enough to create financial security before age 40. To truly safeguard your financial future, it's essential to establish a secondary equity income stream that doesn't depend on your paycheck. This could be fractional ownership in real estate, a silent stake in a small business, or a diversified portfolio of dividend aristocrat stocks. Having equity in something you don't control, whether it's rental income from real estate, dividends from stocks, or shares in a growing business, creates a Plan B income stream. As you approach your peak earning years, this secondary income stream will continue to grow, providing financial security and increasing your wealth without having to trade time for money. Investing in dividend-paying stocks, particularly those from companies with a long history of steady increases in dividends, ensures that you're earning passive income even as you focus on other aspects of your career. These investments can become a reliable source of income, even during retirement, and will continue to grow over time. There you have it, the top 5 high-impact money moves before age 40 in 2026. From upskilling for higher income to securing longevity insurance, these moves will set you up for long-term financial success. If you found this video helpful, don't forget to like, share, and subscribe for more tips on managing your money and building wealth. Let me know in the comments which money move you'll make before 40. I'll see you in the next video.